Well, I'm pretty worried about interest rates. I think the Fed is getting more hawkish. I think they're not just worried about the oil situation, I think they're worried about wages. And I think that's pretty bad for the stock markets, other than perhaps for the banks. What else? Well, yeah, there's a bit of geopolitical worry on trade that is just not going away, but also the price action is not good. The market doesn't really seem to want to go up very much, even when you get good earnings results. So I'm cautious. I'm actually going to cut my vote all the way to a 1.
I can't share Giles's pessimism. Of course, there are a number of conflicts and crises, for example, fears that interest rates may be raised. But that won't mean it's essential for the Fed to hike interest rates faster. I see the rising oil price as a temporary phenomenon. It'll come down again. I think if you find the right sector, for me that still means consumer goods and pharmaceuticals with their attractive dividends, you can't really go wrong. My view, the stock market is still interesting. No sell in May and stay away. My vote for the stock markets is 7. Looking at the chart, I agree with Robert Halver, of course. The S&P 500 won't be lastingly affected by the 3% in the US Treasuries. The upward trend here is still ongoing and intact. In my view, the oil price has the potential to make it to $77 to $80. So there won't be any inflationary trend there. The midterm stock price target of the DAX 30 is 13,500. Thanks to its strength and robustness, and above all the dynamics of the last 3 to 4 weeks. So, summing up, my vote for the stock market is 8.
Well, I cannot share really Robert and Martin's optimism, and I think I will side with Giles this month. Markets continue to react on a daily basis according to the flow of news and ignore the longer-term trends. I believe that after a period of calm, volatility will rise again on the back of mounting political uncertainty. So I keep my vote to 3.
The Werthstein Index is the average of all the experts' ratings and reflects how they expect equities markets to perform over the next 3 months. 1 means extremely negative, 10 extremely positive. In May, the index stands at 4.8 and is thus at the same level as in April.